Given the following information, compute the distribution deduction for a simple trust. Interest income $80,000, dividend income $30,000, tax-exempt interest $20,000, capital gains $25,000, expenses attributable to all interest income $5,000, trustees' commissions allocable to all income including capital gains $15,000. So this question is dealing specifically with the distribution deduction for a simple trust. So let's go ahead and calculate that. So the first step is to look at the expenses attributable to all interest income, $5,000. We need to take that $5,000 and we're going to need to allocate that between the interest income of $80,000 and tax-exempt interest of $20,000. And we're allowed to deduct that $5,000 expense from that. So we're going to be allocating this $5,000 amount based on the relative amounts of interest income and tax-exempt interest. What do I mean? We're going to take $80,000 interest income plus $20,000 tax-exempt interest, and that's going to be a total of $100,000. We then allocate for interest income $80,000 over $100,000 total times $5,000, which gives us $4,000. So we take $4,000 from the interest income and we get $76,000 taxable interest. So we do subtract that away. Let's do the same thing for the tax-exempt interest. So the tax-exempt interest, we're going to take $20,000 over $100,000 and multiply that by the $5,000 expenses attributable to all interest income, and we get $1,000. We then subtract that away from the $20,000 tax-exempt interest, and we get a new tax-exempt interest, a net amount that we're going to be using of $19,000. So that takes care of the $5,000 expenses attributable to all interest income, the $80,000 interest income, and the $20,000 tax-exempt interest. So now the next step is to add that taxable interest of $76,000, the tax-exempt interest of $19,000 we just calculated. We're also going to take $30,000 of dividend income, and we're going to add that in, and also the $25,000 of capital gain. We add all those together and we get $150,000 of income. So now we have to take that trustees' commissions allocable to all income, including capital gains of $15,000. Now we're going to be allocating that to dividends and taxable interest, and I'll explain why in a moment. So the way we do this is we take the respective $30,000 of the dividend income, $30,000 of dividend income, and we divide that by the total income of $150,000. We multiply that by the $15,000, the trustees' commissions, and we get $3,000 allocable to dividends. We do the same thing for the taxable interest. So the taxable interest, we calculate as $76,000, divide that by the total of $150,000, multiply that by the $15,000 trustees' commissions, and we get $7,600. Okay, so we've got one last step to do in order to get our distribution deduction. So the distribution deduction does not include tax-exempt interest and capital gains. So that means it's only going to include the taxable interest and the dividend income with respect to determining the distribution deduction. Now we have to subtract away that portion of the trustee commission we just calculated. So we subtract away $7,600 from the $76,000 tax interest, that allocable portion, and we get $68,400. We then do the same thing for tax dividends. $30,000 tax dividends minus the $3,000 allocable portion of the commission that we determined, which is $3,000, and we get $27,000. Finally, we add together $68,400 plus $27,000, and we get $95,400, which is the amount of the distribution deduction. So the correct answer is C, $95,400.